Our next section is the liabilities. Remember we said that the balance sheet has 3 sections. So this section is called the liabilities. So the liabilities are money that the company owes outside parties. It involves money borrowed in order to support the business activities. So the example of the business activities are your suppliers' bills, the bonds, salaries, and there are much more. Each and every business has a liability because of each and every business has to borrow somewhere. Loans, you have to borrow in order to start the business as well. That's another example. So liabilities come in 2 different ways. You have your current liabilities and your long-term liabilities. Let's look at the 2. Your current liabilities are those that are due within a year. So any liability that is due within a year, from the 1st month to the 12th month. Anything after that is called a long-term liabilities. So those are the liabilities that are due over a year. We call them your long-term liabilities. Examples of both. A current liability can be your salaries because of it's a year based. Even though a person in the company, your employee can stay, employer can stay for a long time, but at the end of the day, it's a current liability because of it's something that you pay every month and till a certain period of time. You never know when the person is going to quit the job or resign or get a new job. Your long-term liability is mortgage, which is a perfect example, because we all know that some mortgages take 20 years for you to pay, some take 10 years for you to pay, but it is over a year. So which means that it does fall under long-term liabilities due to the description that it goes with. Now that we are done with our liabilities, let's move on to the last and the next section.